How you doing, guys? I don't know how many people are on this at the minute, but I'll give it another 30 seconds. Just let everybody gather their bearings. I can't remember if ads are turned on or not, so it might take a second for everybody to just kind of pile in. So while all of that is happening, let me just throw out. Cool. Just let me know if you can hear me, guys. I'm just going to for the Amundo. How you doing, man? You all right? Oh, okay. What's all this? I'm getting messages. Ooh, yeah, that's no good. I need to turn that off. I'm really sorry, guys. Give me a second. I'm getting desktop notifications for Telegram. Turn that crap off. Yay. All right. G, how you doing? Good, good. I'm going to get straight into it in a minute. I'm just waiting literally another 30 seconds or so because I don't know if ads are turned on. I can't be bothered to check. But I want to talk about the stock market. I want to talk about crypto. We're going to go over Bitcoin, obviously, and all the usual suspects, and see how we kind of fare going forward. Because, yeah, we've had a pretty decent run. So obviously things can change very quickly. Now, whether or not this run is valid for a multi-year run, whether this is the turning point and all the good stuff, there's a lot of arguments to be made that 15K was the turning point, and so on. But we'll go into all of that today and we'll see if we can figure all this stuff out. So let me see. Just want to make sure. Yeah, so that's gone out there. That's fine. Okay, so yeah, cool. Right, so we'll just keep going, and then obviously as people come, I know there's a few of you. I know Serge was talking about he wants to go over the stock market. So what I'm going to do first is we'll start with the S&P. I'm going to start with a fresh chart like this. We'll go up to the monthly, and we'll see if we can ascertain what's happening. Right. So I'm going to whiz through this analysis, right? And if there's any questions or anything that anybody wants to talk about, throw everything into the chat. And then obviously I'll get to that as we go. But I want to blast through this analysis because I want to get to the meat of, what I think's happening going into the remainder of this year, and then obviously starting the first quarter of next year. Bear in mind as well, things are going to start slowing down going into Christmas. So we had that peak up here, right, which ran into this LP. We can get rid of this now because we don't need it. And effectively what's happened on this peak is just think about price reaching for or distributing, right? Or doing distribution. It's gone up there and it started to offload, sells, all the good stuff. And we've had a pretty decent response away from that and a really nice reaction from this. Now, this is the monthly chart. So last month was pretty bearish. This month seems okay, right? Seems pretty good. Remember, this is like the third day of November. So all of this movement, right, from around about, let's just call it 4,200, right, to current price, slightly higher. Right, all happened within 3 days. So it's currently Friday. This month started on Tuesday, I believe it was. So you're talking from Tuesday to Friday. We've had all of this movement, right? And things are going to start slowing down. It is possible we get a Santa Claus rally, as they keep calling it, and it has been, termed over the years. But in terms of whether or not this is going to bleed lower going forward, is a function of what the Fed is doing, but also global economics. The dollar is still obviously the glue that holds a lot of stuff together. And at the end of the day, if you factor in just pure technical analysis or pure analysis in terms of, order flow and whatnot, there's a lot for it to get through down here. So if you kind of take roughly 4,100 all the way down to around about 3,500, right? That range right there. And I'll list or show you the range. I don't know if this works this way. Yeah. So that range right there, about 4.1 to around about 3.5. This is a mess, right? So if price does reverse this and it starts to take out this low here around about 40. Oh, where's my highs and lows? That's weird. Must have turned it off. So anyway, yeah, if price gets below 4,100, right, 4,100, and it reverses this without showing any signs of trying to take out this high, then it is likely we're going to run deeper into this LP, right, or this mess over here. But because we already had a really deep, so we had the first drop here and then a really deep one here, and then obviously a snapback, and then it started to run higher, right? So this LP grab right here, this big one, okay, is pretty significant, right? And for price to come all the way back down here, if it does, I mean, that's really not going to bode well for any, you know, any markets around the world, because that means that the S&P is basically getting destroyed, right? But there's a lot for it to get through, and we're at a time of the year now where unless something cataclysmic happens, or there's a flash crash or a black swan event or some news hits, you know, the markets are pretty much going to start to slow down. We may get a little bit of volatility as the volume dries up, but I'm not expecting anything major, you know, to happen on the S&P or the Nasdaq or the Dow Jones. I'm not going to go through the others because it doesn't really matter. We're pretty much seeing the same thing, you know, in terms of like structural setup. So the S&P is really where it's at, right? We may get some continuation to the upside. If it goes, you know, then I'm not expecting it to just rally and rally and rally and go straight through all-time high and really rip. I mean, we're literally at the start of November. We've got a couple of months, you know, before the end of the year. And obviously December is known for just being a really, really dry month. And again, as volume dries up, we may see a little bit of volatility. So just be careful, you know, with that. Now, with that said, we are starting, excuse me, we are starting to see a little bit more of a retracement. Not retracement, sorry. So I want to talk a little bit about gold briefly. So as you guys know, obviously we're holding PAXG at the minute, and obviously PAXG is following gold, right? It's not exact, but it's pretty. You know, if gold is going up, PAXG is going up. It's, you know, it's always going to be paired to gold. You know, and the whole point of PAXG is to have a custodial ownership of, you know, physical gold, right? So it's not like gold's going to drop down here and PAXG is going to hold its value up here. It doesn't happen. It's literally just following it around, but it's not one for one. That's the point I'm trying to make. Let me just check the chat. How you doing, Serge? What's going on, man? Okay, cool. Yeah, I just wanted to make sure that we're still here. So really nice reversal on gold. I am expecting all-time highs on gold to be taken, you know, and we see 2,100, possibly higher. Gold is a really good indicator, you know, to keep an eye on in terms of general consensus and where money's flowing. You know, if there's more money flowing into gold, historically, that means people are trying to, you know, well, it's risk off basically. You know, they're looking for safer places to hold their money, and gold historically has been really, really good for that. Regardless of whatever people think, you know, there's so many variables, you know, with the, you know, with this stuff. But historically, gold's been a great place to, you know, to kind of put money, you know, when things are getting a little bit crazy, right? So with that said, PAXG is going to follow suit, you know, and I'm expecting PAXG up here, you know, roughly around about 2040 to around about 2080, you know, a nice little run. So that's that. And now let's go over to Bitcoin, because obviously Bitcoin is probably the topic of conversation, you know, most of the time now, especially since this recent run. And I want to talk about this low down here, right? Around about 15.5. So when price got down there, right, every possible indicator, right, that price was going to continue going lower, you know, was there. But if anybody remembers, you know, and I'm sure most of you do, because obviously I'm pretty, I like, not accurate, I'm pretty clinical with the way that I, you know, the way that I talk about stuff. I was saying, if we just go over to the monthly because you can see it easier. The whole premise of this was trying to figure out, and he's still trying to figure out, is this a rally and a downtrend, right, or is it a reversal, right? That's kind of the bane of, you know, investing existence. You know, that's what we're always trying to figure out. You know, are these, you know, is it one thing or is it something else? If it's the first thing, I'm going to buy. If it's the second thing, I'm going to sell, right? And obviously, if you know this, or at least if you can ascertain this, you can make a, you know, an informed decision and probably be on the right side of an investment. The problem is the range that you're playing with on Bitcoin is so wide that from 15K all the way up to around about 37K, price could rebalance literally here, you know, 37,417, and then just drop and just keep dropping and go below 15K. The problem is, you know, you end up in these kind of back and forths with people. You know, I don't read stuff online anymore. I've literally come off all social media. I've got no interest in it anymore. I'm tired, you know, of just reading crap. But when you have a normal conversation with somebody who's trying to figure stuff out, and you kind of go back and forth with a group of people that are, genuinely interested in investing and trading in the stock market or the cryptocurrency market, and they just want to become better investors, right? You end up with this, yeah, but how do we know, right, that this isn't the turning point? How do we know that, price is going to hit this level and start to come down? Well, we don't, right? But what we can do is we can start to break things down and start to try to understand what's happening outside of cryptocurrency that affects crypto, and then what's happening within cryptocurrency, and are we seeing healthy signs, of a turning point, right? Now you guys know I've been banging on about, an illiquid cryptocurrency market. And there's so many things going on, in terms of, we've had the recent, that Sam, well, basically SBF, he's been arrested now. Sorry, he's been, found guilty now. You've got all of this SafeMoon stuff going on now with them not being, being arrested for fraud and whatnot. You've got the SEC obviously really pressing, and going after, a lot of these projects and a lot of these people who are, in cryptocurrency. But what does all of that mean, right? We look at Bitcoin and we say, well, Bitcoin has a chance to get to 37,000. I just want to make some money, right? Okay, great. And I know there's people that bought down at 15 and in the 20s and so on. They've made a lot of money on this. That's fantastic. But what does everything that I've just said mean? What does it mean that somebody's been found guilty of fraud? What does it mean that people are getting arrested, for committing securities fraud, and just basically defrauding investors, and stealing investor funds? How does that impact what Bitcoin's doing or what the cryptocurrency market's doing? One, it cleans it up a little bit, but more importantly, it shows something vital, in my opinion, right? And that is the funds that are being stolen from investors, right? Well, at some point, they will try to recoup those funds, whether it's through the sale of property, whether it's through, finding, for example, wallets, or cold storage that is holding X amount of, coins or whatever. And all of this over a longer period of time may potentially go back to investors, and it again adds another element, right, of illiquidity in the market, because you now have a whole host of coins or tokens or illiquid assets, right, that may hit the market and then further reduce the the liquidity that's in the cryptocurrency market, right? There's not enough, in my opinion, of people, whether it's investors or institutional investors, right, buying Bitcoin to warrant this move. And I've said this before, like, how can a move from 27,000 to around about 36,000 be justified with the volume that we're seeing on Bitcoin, right? Or that the volume that we're seeing in and out of cryptocurrency and the inflows and outflows, right, or the on ramps and off ramps, or on ramp and off ramp, values in fiat currency coming off, for example, exchanges like Binance and so on. And we know Binance has got a lot of problems. I obviously talked to a lot of people, and I've been back and forth with somebody recently about Binance, and this is the turning point. It's going to keep going. Maybe so. But I reminded this person the correlated ratio or value of the movement we've seen on Bitcoin and the movement that we are seeing on Binance, altcoins, and so on, is so disproportionate to what it normally is that it begs the question, why is Bitcoin moving on its own and everything else is kind of not moving at all? Or if it is moving, it's only moving slightly. Yeah, you'll notice Bitcoin is, has moved, and it's only BNB, Ethereum, and maybe XRP, some of the really, really top high-end coins, that are moving with Bitcoin's movement. And it's in sympathy. It's not because it's bullish. It's not because there is a mad rush for people to throw themselves into cryptocurrency, right, to invest, which then begs the question, and you'll see kind of where I'm going with all of this, and I'm kind of interchanging between interchanging between different charts, even of the same token or coin, because it begs the question, is Bitcoin now becoming what some maxis are saying, or some people who really sort of believe in Bitcoin, is it becoming that it's breaking away from the norm now and it's just becoming its own thing and just going to become completely dominant as people pull out of all of these other investments, and just focus on what they feel is the safest bet, Bitcoin, right? If that is the case, we should be able to see the volume to warrant that inflow. I am not seeing that, which means, in my opinion, the movement that we're seeing on Bitcoin is more of a indirect movement based on potentially miners, potentially larger institutions, that are manipulating price to then offload at a later stage and make some money, right? Now, obviously, which one of those two variables, or sorry, which one of those two scenarios is the one, we don't know, but as far as I'm concerned, at this stage, the only thing I'm interested in is the pullback. I said this recently. I was saying, I can't remember who I said it to. I've talked so many times to so many people, but it was in the Discord. I was saying basically the only thing that I'm interested in is the pullback now, because I need to see, is it worth picking up, Bitcoin roughly around about 28,000 to around about 32,000, right? Why those levels? Because if you pull out on the daily, you see when you have a movement like this, right? And this applies to all asset classes. When you have movement like this, right, that's more exaggerated than what you've been seeing previously. There's more room for price to run deeper and still maintain that move. What I mean is, you take 27,000 all the way up to around about 36,000, right? That's almost one full movement. It did break slightly here and here, where it just paused a little bit, but the entire move really is from, say, 27,000 to 36,000, right? Okay, so what's the likelihood that price maybe just pulls back a little bit and then continues going up, or you look at the other factor, there's all of this range that price could come into and still maintain this small bullish short-term move, right? That's what I'm getting at. We don't know where price is going to drop. And then what we start to do is we look at the levels and say, okay, we know this is a very, very significant level, 32,000. It's been hit so many times. And the reason I went as low as 28K is because of all of this over here and this here as it overshot. And you see this pause here, and then price came up and it reacted really nicely here at 32. And then it dipped all the way down to around about 25-ish. And then it went all the way back up to 36. So as it comes down, in traditional technical analysis, it is, resistance becoming support effectively. So now that we've kind of passed through that point, if we start to pull back and we find some support in this area, this is key what I'm about to say. If price pulls back and hits this area, I am not bullish. What I'm saying is it worth, this is all I'm looking for. Excuse me. Is it worth picking up Bitcoin between 32 and 28 for a run for complete rebalancing? I'm going to say that again. Is it worth picking up Bitcoin between 32 and 28 down here, right, for a run higher for a complete rebalancing at 37,417? So what I'm looking to do is I am looking to basically, if I believe price is going to hit 37,417, I want to get the best possible price for that move. Grabbing it right now wouldn't make any sense at 34,449, right? Or let's just call it 34.5. It doesn't make sense to grab it here because that last portion is just literally that last portion. We've had or missed, in this case, the whole move, but we're waiting for confirmation, right? Some people grab it here on a risk. Fine. I want to see a pullback now, right, on what seems to be a pretty decent move. If it does pull back 32 to 28, I will assess it, look for a nice snapback opportunity, grab it, have a relatively tight stop, but give it enough room to move around. And then you're looking at potentially taking an average trade or an average price of here all the way up to 47,413 or whatever it was, right? And then you're looking for a 20 or 30% movement, right, on the money that you're putting down. Then what that does is if you do grab price here on a pullback and it does hit this level up here, 37,417, that puts you in a much, much stronger position because one, you're heavily into profit. You're up 20, 30% on your investment, right? But then more importantly, you don't have to make a snap decision and say, well, okay, if you are in a bull run that is going to ensue, you have literally just entered the market at a time when it's giving you all of the indication that that is indeed the case, right? And if not, you can take some of your profit and leave the remainder of that, that position effectively a break-even stop or slightly less, or even use the profit that you've made to add additional additional movement, or additional risk in this case to give it, a little bit more leeway. So the point I'm trying to make is if you grab it here at the right possible time and the right moment, and you get a really nice run, okay, you put yourself in a position where you're up on your investment, you've got confirmation. If it continues going, great, you've got a good price. If it doesn't continue going, you get stopped out. You've made some money and then price continues to go lower. And then you start the whole process again, start to think about areas to pick it up down here. And along the way, if we take out this level here, 24,770, I leave all of these levels on my chart for a reason. If we do end up down here, that is pretty structurally insane. Think about it like this. If price, and I'm just going to have to draw it like this for now. I'm not saying it's going to do that, but let's say price comes all the way down. It's negated this move. Yeah. And if it negates this move and it takes out the lows here and it starts to run deeper into this LP, that means this then becomes a fake out, a false breakout, rebalance point, a distribution point, a distribution move. It's not an accumulation, in terms of buy side liquidity. It's just purely rebalancing distribution, right? And then it's just coming back in line with its original move, which in this case would be a rally in a downtrend. Now, I hope all of that made sense. It made sense in my head. So that's kind of Bitcoin. I'm just going to quickly go over to Binance. Again, not convinced on Binance. The levels still apply. 186 and 148. It doesn't necessarily mean it's going to happen this year or next year, and it may not happen at all. But that's what I'm still focused on. I'm not seeing any indication whatsoever from BNB or Binance or anything Binance related. That we are going to see a really nice upside move, on Binance. And to be honest, if we do, the same logic applies, on Binance as it does to everything that I've just said on Bitcoin. So we can use that same logic in terms of a nice move, wait for a pullback, etc., because I mentioned this about investing being 100% psychology. I absolutely believe it is, and the reason I say that is because at the end of the day, making money has got nothing to do with the price of what you're buying. It's about where you buy, relative to the real move. So what I'm saying is, if you pick something up at $100 and it goes to 200, great, you've made $100. But if you pick something up in a much better position and you time the market better and you grab it at 150 and it goes to 1,000, I would much rather that. That's what I'm looking for. I'm not looking for the best possible price. I'm looking for the best possible move that's going to last much, much longer, and allow me to have more confidence to just leave a position, because I've done all the analysis and I'm effectively giving up profit, in the short term and a better price to make a much larger amount of money, on the back end, years down the line on an investment that makes more sense. So that's it for the analysis. I managed to get it done in around about 20 minutes or so. I'm not seeing, no worries, Serge. I'm not seeing any questions. I wasn't planning on sticking around too long. I am very tired today. You can hear it in my voice. I'm losing my voice a little bit. But XRP is doing all right. Nice little run on XRP. But again, XRP is just basically moving, as a function of what's happening on Bitcoin. Important to remember, XRP isn't on its own page. DOT isn't on its own page, right? SHIB isn't on its own page. All of these, I mean, look at this. Somebody made a mention of Dodge, or Doge or whatever. It should have been up in the 20s, not necessarily 20s, but it should have been at least at 10 cents, at least 10 cents. Think about it, right? Bitcoin's moved all of this movement, right? You've had in the last 2 weeks some really, really nice movement on Bitcoin. And if you just go over to, Doge, for example, we've had literally from about 602 to a peak of around about 7.4. That's nothing. We should have at least been at 10 cents. SHIB, SHIB should have been, SHIB should also roughly been up in the tens. If you look at something like Ethereum, which was also had a pretty decent move, still a narrow range, narrow range, not a real, oomph to this movement. Where's the volume? Where's the liquidity? Where's the real push, to get things moving? There isn't any. So the argument for me is Bitcoin literally completely on its own page now and it's doing its own thing become, the place to be? Or do we have a serious problem within cryptocurrency, which I'm going with the latter. I don't think it's the former, to be honest. But again, we'll see how it all plays out, right? What are your thoughts on commercial real estate, corporate debt, and subprime auto loans trifecta going into next year? I think it's going to be a mess. If you and you, Serge and Lobo, how are you doing, Lobo? Like especially you guys, because obviously We've been talking about this for oh man, for ages and ages and months and months and months and months, about debt and, mortgage defaults and repossessions and all of this type of stuff, right? And I have a very strong suspicion, right, that started to happen quite a while ago, right? In terms of people defaulting. Now, when I say defaulting, this happens across the board. It could be real estate, corporate debt, it could be subprime, auto loans, it could be everything, right? Even right down to something as simple as people just defaulting on their credit card, payments. So it has a lasting effect, but it also has a lagging effect. All of this takes time to unfold, right? And obviously, the larger corporate debt, right, i.e. through banks or institutions, is being suppressed by the news. It's being suppressed by the institutions themselves, because there are a lot of cracks and a lot of problems, right, with many banks out there, right, but they're not telling anybody about this. Have you noticed that this year, right? We had all of those problems, right, with those banks going under, and an obvious attack on cryptocurrency, obviously, in terms of banks, allowing cryptocurrency payments and these types of things. It was just an absolute attack, right? And with that said, and with what happened, and then with with JP Morgan deleting all of those emails, and with money getting thrown around left, right, and center, with banks defaulting, with banks going under, with regional banks really suffering, right? Isn't it interesting how all of that just seemed to kind of disappear? If you go back into, say, 2008, 2009, it was like, wow, this is really, really bad. It was like, just everybody was talking about it. It was terrible. It was an absolute disaster, right? Whereas this time, all of a sudden, it just seems like, yeah, we fixed it. Everything's fine. The economy's strong. Things are okay. No, I don't really think so, because there was, yeah, exactly. And there was talks of Deutsche Bank, and then obviously Credit Suisse. There's so much, man. Like, where's all that gone? You're telling me that Credit Suisse is okay now, and that Deutsche Bank is okay, and the shit that's going on in China is okay, and so on and so on and so on. No, like, this is serious. This is a serious problem. Defaults are already in play, right? They're already happening. They're just being suppressed. We're not hearing about it. It's not in the news. It's not being talked about enough, until eventually what happens is something of a, think about it from a manipulation point of view, right? Imagine there is a small group of people, it's a bit random, but imagine there's a small group of people. Charles Schwab is in serious problem. Yeah, absolutely serious trouble. Imagine there's a small group of people, right, that are saying, all right, look, we've got 100 banks, that are basically going to go under, right? And this is a big deal. These banks, once they go under and the people find out about this, it's just going to be chaos, right? We're going to have a serious problem, massive black swan event. It's just going to be terrible, right? And they say, okay, look, we're not going to tell anybody about this. How do we take advantage of this situation, right? And they all talk amongst themselves, because we know they do. These people are snakes. They talk amongst themselves and they're like, okay, we need a catalyst, right? Before we allow this to hit the market and cause chaos, we need a catalyst, right? So we can take advantage of this, and we need a scapegoat, right? We need a catalyst to make the scapegoat effectively. And let's just say Evergrande, in China, perhaps them, or, I don't know, a country defaulting, whatever, something pretty significant that they can say, yeah, this was the problem. So when that news finally hits, it isn't the banks and everything else that really caused the problem. It's, oh, well, it was Evergrande, or, oh, it was this particular problem, or it was, that particular problem. And it all goes on that one thing. And that was the reason that caused the flash crash, or, the problems that we see at that time, et cetera, et cetera, et cetera. And this is what I think is happening, right? I think we're going to, and it's really interesting, actually, because somebody said to me the other day, oh, you're just a conspiracy theorist. And I was like, don't be stupid, man. I think there is an element of something just doesn't feel right now. Yeah. And it's very difficult to kind of pinpoint that and say, well, it's specifically this or that or the other, because there's too many bones out there, right? And you don't know which one to grab, because is it Charles Schwab? Is it China? Is it real estate? Is it corporate debt? Is it a bank that's going to go on? Like, what is it exactly? And which one is going to be the cause of this problem? I think it is a holistic problem, right? There's something systemic happening, economically across the globe. And I think it's almost like they're introducing technology, right, for a better financial system, while trying to cripple an already existing traditional system that they actually need to continue to take money from people in a creditor debt system, right? So it's very interesting. It's very, very interesting. And I don't believe for one second, that everything's okay. This isn't even about, oh, a war could break out, or this particular variable or that particular country or BRICS or the dollar or whatever. It's just there's just too much going on for there not to be a pretty sizable movement in the market to the downside for me. And I think it's very difficult. It doesn't mean I'm not going to be trading, and it doesn't mean I'm not trying to find a nice spot on Bitcoin. Just to go back to the Bitcoin chart to give you an example of what I'm saying, everything that I was talking about, if price drops to 32 to 28, you take advantage of, short-term movement, short-term volatility, short-term volume, and so on. But it doesn't take away what's actually happening, this kind of holistic issue that could just unfold at any moment. So, and I've said it many, many times, this particular time is different because we have the addition of the cryptocurrency market now. We never had this before in previous crashes. And Serge, before I look into what you've said, you did ask me about, how would I, because I've been through, market crashes, how would I deal with all of this if there was a crash in the market? If I go over to the S&P for a second, I was thinking about how to answer this question, right? Because sitting in a crash is really difficult. I was in the market twice when the market crashed, right? The third time, I wasn't in the market. I just watched it happen, right? And it's really interesting because the first two times I didn't learn anything. So when it first happened to me, and I was sitting in a stock, it was a biotech stock that halted, and I was screwed basically. I lost a lot of money. The second time it happened, I was in the diamonds, right? I was trading the diamonds, and the Dow dropped about 450 points, I think it was, which at the time was pretty insane. It was a flash crash. It was pretty horrific. And I didn't learn from the previous one, right? I reacted way too quickly and I got out way too quickly right before the recovery, and if I'd have done that with the biotech stock, I would have made money. And if I'd have done that with the second crash, I would have made money. The third time it happened, I wasn't involved, right? And funnily enough, there was a fourth time when the pound actually during Brexit basically tanked, which was insane. There was a guy that I know that basically ran, and this is not a joke, he ran $150 up to $27,000. A phenomenal trader, and he threw it all on a long, right, on the pound at Brexit, and it just tanked, just lost it all, literally in an instant, And to answer the question directly, what would I do now, right, is I would do nothing. I would actually let the market crash first. There's only two ways to play something like that. You either believe that the market is going to crash and you just short and just stay short, right? And you hold a position short on, say, the S&P in a way that allows you to be stress-free, not emotionally attached, and that's not going to cause an issue financially for you. So, for example, if you've got 20 grand to take a short on the S&P, I wouldn't do that. I'd stick 5 grand in and just leave it, let it move around a little bit, because when you're doing it that way, is I would rather be in with 5 grand knowing that I have, movement, or I'd scale in, for example, on a short as it's going up for that potential crash, as opposed to just throwing it all in, and then just sitting in the market while it's grinding up, because it's so hard to time, right? A flash crash just happens out of nowhere. So it's so hard to time, and you end up sitting in a position as prices going up until eventually you get margin called. I wouldn't do that. I would scale in, and I would always give myself at least 10, 15 grand leeway so I can continue to scale. And then I would even add additional money if I needed to, right? There's that way. The other way is to just let the market crash. Yeah, just let the market crash and buy it. Think about it like this, right? If we take the S&P and you say, okay, look, how do you deal with a flash crash? And you get one, right? Bang. Something pretty significant, right? What's the likelihood? Because you've already assessed all the levels, you know where price could potentially go, you've done all of that good stuff, and let's say you've identified 3 levels: 34, 3,400, 3,000, and 24, just for argument's sake, right? You wait for it to happen. The first one, it drops. You're like, whoa, that's just come out, and it's instant. It's not like it just slowly gets down there. A flash crash is bang. One minute it's at 4,366, and then all of a sudden it's at 3 3,400. Like, what the, and you're like, shit, oh my God. When that happens and you've got, say, 5 grand, grab 1,000 of the S&P. What is the likelihood of the S&P going to zero? Just practically impossible, right? So you grab it at 34, 1,000, right? It starts to rally a little bit, offload a couple of hundred, and then you're waiting, you're being patient, you're being bang. Yeah. The next one happens. So price goes up, and then it drops. Yeah. To your next level, which in this case we said was 3. Oh, that's way too big. 3,000. Grab some more. Yeah. Remind yourself, what's the likelihood, of price going to zero? Very unlikely. Yeah. What am I doing? I'm assessing as it's happening. I'm assessing. I'm not emotionally invested. I don't care. I'm assessing as it's happening and I'm reacting accordingly. I've got my levels prepped. I'm super, super ready. I know it's coming. It happens next time, right? Or the next one. Price starts to rally. Then it drops, right? And it hits your 24, right? You grab it again. Now, you started with 5K. You've made a little bit. Maybe you get to 5,200, 5,300. I've done this before, guys. So I'm telling you that I'm giving you a realistic example. You started with 5. You were very clinical about your levels. You've mapped everything out, and you're expecting it to happen. If it doesn't happen, so what? But if it happens, you're ready. You start with 5. You've grabbed some at 3, 4. It rallies a little bit. You make a couple of $100. You take that off. You're now at 5.2, right? Total value. Right? It drops to 3. You grab another 1,000. It starts to rally a little bit. You take some off. It drops again to 4. You add 2,000 this time because now you've moved a lot. I mean, that is a pretty significant drop, for the S&P. That is massive, right? So what's the likelihood that you'll get a prolonged rally? Quite high. Now you're holding a pretty decent position, roughly, if the math's correct in my head, about 2.8, 2.9, right? Or even lower, depending if you put the whole lot in. Price starts to rally. You get to 2.8, starts to get above that. You're holding a much larger position. You haven't sat through all of this crap. You've precision, strategically, and precisely entered the market at the right possible moments for your trading and your analysis that you've done, and then as price starts to rally into the 3,000s again, by the time you're done and you're out of the market, or maybe you stick in for a full movement over a multi-year run, whatever, because obviously it's a flash crash and it's gonna recover. You end up your 5,000, you can turn it into 7, 8, potentially 10, and maybe more, depending on how long you hold on for and what you're doing with it. So that's how I would deal with it now. Yeah. Whereas before it was just, I was in it and, I was an idiot, to be honest. But now I would never get caught in a flash crash. I'd just wait for it to happen and then just act accordingly. So let me go back. Evergrande restructuring court. I hope that helped, by the way, man. Evergrande restructuring court date is December the 4th, second date already. Just gave them an extension. Cool. Okay. Something to definitely keep an eye on. Which 2 times were those times? One of them was 2008, and the one, I think it was, don't quote me, I think it was 2011 or 2012. Obviously, one of them was 2008. I'm pretty sure it was 2011. I'd have to go back, but yeah, 2011. Profit recently. All technical steps for crash now in place, just waiting to fill in the blank event to call the trigger so everyone can point back and say it was impossible to predict. Yep, 100% lower. That is, I'm telling you, that's what's going to happen. I'm convinced of it. Honestly, if it just goes, whatever, man. You know what? I was wrong. People want to point fingers. I don't care. That's fine. Everybody has their analysis. Everybody, does their own way of trading, investing, whatever else. This is what the way that I do it. I'm just no one's going to convince me, right, unless I see something pretty convincing, that we're not going to see a crash. If the S&P goes vertical now, a flash crash is going to happen in the near term. Yeah, I agree. It just doesn't make sense. It wouldn't make sense, right? It would be going up on air if it goes vertical. No, I know exactly what you mean. Honestly, if a flash crash happens, I'd trade the VIX. Yeah, absolutely, man. Yep. It's insane. You could look at a chart for the VIX and any flash crash and the VIX comes back to 20 points within 3 months. Yes, Yes, there's and this is a really good point that you've just said that, and I'll say this, and then we'll kind of call it a day for this live session. But if you look throughout history, there are instances where, for example, with the S&P, you just buy it and hold it, buy it, hold it, buy, hold, buy, hold, and historically you'll make money, and that's the whole point, right? We overcomplicate stuff, right? I don't know if he's on right now, but there's somebody that I'm mentoring. And I was this was right at the beginning of me mentoring him, right? I was showing him oil, right? So I was showing him crude. There we go. And at the time, and I had it on the weekly chart at the time, I've got a snapshot of this somewhere, but basically, price was like up here somewhere. I can't remember where it was, but price was nowhere near this level, right? And I made a reference to this, and I showed it in a video, and I was like, price will eventually get down here, and obviously it did. Now, there are so many things that can make a short at the time when I was talking about this not work, even though price eventually got down there. I knew it would. It was an absolute that price was going to get down here. No questions asked. It was going there, period. That's it, right? So you say, okay, I can simplify this and just go short and leave it. And when it gets down there, I'll buy it. And that's the end of it. I've made money. Or you can short, let the market wiggle you out, try and short again, let the market wiggle you out. You think, oh God, I'm wrong. I'm going to buy. You buy, the market basically, stops you out. You get chewed up in all of this crap. And then when it finally gets down here, you're trying to short literally at the last possible moment. And then it rallies and reverses. And you're like, oh my God, and then it comes down a second time just to, stick the middle finger up and say, haha, so the point I'm making is simplicity. If we simplify what we're doing, it makes life so much easier when you just do something simple, like the VIX always goes back to 20 after 3 months or whatever, back by 20 points after 3 months. What else do I need to do? Nothing. Just wait 3 months, and when it moves to 20 points, I get out. Happy days. So simplicity. Yep, simplicity is the best. No one could believe oil went negative in 2020. Yeah, do you know what? You guys aren't going to believe that when that happened, I bought at 13. Where is it? I've got the print. It was on IG Index, right? I bought at 13. My brother bought. So yeah, I bought at 13.70. My brother bought at 15 or 14.80, I think it was. He was using that really annoying Trade 212, right? So he was sending me snapshots, right? Because it was so funny. A little story for you. So when that happened, I was like, there is absolutely no way that this thing is not going to recover. Not a chance, right? So I was picking some up on the way up, and I just said to him, just leave it. We're probably going to get around about $30, $35, whatever. And we were kind of scaling in and out. We're making a little bit of money on the way. He made a lot of money, to be fair. But at the time, it was like, okay, when it started to slow down in the 30s, I got out and I just left it, right? And I was like, done, not going to touch it. Then when I looked months and months after, right, it was like up here, and I was thinking, shit, it's all the way back at 60, and then eventually it's come all the way back up here in the bloody 130s, and now we're kind of hovering around the 80s. I mean, this is insane. Like, that is insane, all of this, but it happened. It was pretty interesting. But the point being, it's like the reaction to this was flawless, absolutely flawless, because I'm so seasoned, no emotion, we were just back and forth through text messages, and he was like, yeah, I grabbed some here, and he was, trading, and I was picking up my bits on IG Index. Flawless, absolutely flawless. Go back 10 years, forget it, man. I would have got chewed up in this. I would have lost a lot of money. So anyway, that's me. Can you put up a chart of the VIX, maybe show people crashes and what happened? Yeah, sure. So I don't know if I've overhit the limit here. I had to delete a bunch of stuff. Let me try. Yeah, it's added it. It's fine. Let me just do the monthly. It's a little bit easier so we can see. 1 second, guys. I just need to mute for a sec. All right, 1 sec. This is a bit better. We've got more info to work with. There we go. About there. All right. So have I muted? Have I unmuted? Yes. Yeah. It should. So if we take a look at, where are we? So, and I want to show the peak. This is why I'm trying to, I think it was, sorry guys, 1 second. What I'm going to do is I'm going to put it slightly to the left, right? So we can see the peaks, because otherwise there's no point. It was 2011. I remember now. Yeah, it's either 2011 or 2012. You know, that second crash, it was 2011. I'm sure of it. And then let's say this one here. There. So look at these peaks. You know, obviously 2008, 2009. Between 2007 and 2009, I'm not going to go into it. We know subprime lending, all that, you know, crap, whatever. Just global chaos, right? And the VIX exploded, right? Now, even if you were to say, like 20 points, right? As a baseline, say, where is it? There, right? So, and I know this is getting a bit messy, but I'm trying to illustrate your point. Yeah. The Swiss franc. Yeah, I wasn't in the Swiss franc, but I was in something else, and it was bad. It was really, really bad. You know, it was I remember 430 something points on the Dow, just instantly, and I was like, shit, what, you know? And I was trying to process what was happening, because at the time I had 5 screens. You know, my system was pretty fast, but the internet isn't what it is now. You know, and it was like the data paused, everything paused, and there was nothing happening. There was no, you know, time and sales basically stopped. You know, the L2 stopped, everything just stopped, and I was like, shit, like, you know, and I was frantically trying to, you know, reconnect. I reset the route. I was trying to get back on. At the time I was using TradeStation, and I was trying to figure everything out. Whereas now you just pick, you know, it's like if my internet goes down, I'm on my phone. I've got access to everything quickly, bang, bang, bang. You know, so it was a little bit challenging at the time to be able to figure out what was going on. Whereas in 2011, that wasn't the case. You know, I had, you know, sorry, 2011. Whereas like now, if the S&P just basically tanked now, it wouldn't make a difference, because the systems are much more robust and they can handle something like that. So anyway, let me get back to this, because I need to shoot and go and eat. But let's say you're 20 points. So if we just take a baseline of, I don't know, roughly, let's say here, right, round about 18, right? So on these peaks, you know, going back to what you were saying, Serge, if you short the VIX, any time that it runs 20 points, right, from a baseline of around about 15 to 18, you're almost guaranteed to make money. And that's it, basically. You know, this is just a recipe to just basically print money. The question is, why can't people do that? You know, and I think for me, in every single case, it's always because people allow their emotions or their psychology to get the best of them. You know what I mean? Did that help, Serge? Sorry, somebody's messaging me as well. Yeah, I've got to shoot, guys. Yeah, Mike wants to jump on a call. yeah, it wasn't for me. I already know this. Yeah, no, for sure, man, for sure. But no, it's really, really cool to look at. So anyway, I'm going to leave it there. I need to jump on a quick call with Mike. And I will chat to you guys really, really soon. Obviously, I'm in all the usual places. So when you need me, just let me know. And yeah, we continue to wait for a market crash. All right, guys, I'll speak to you in a bit. Ciao.